comes down to computers communicating.
The information superhighway can be a confusing mix of on-ramps and off-ramps.
Bitcoin is worthless artificial gold.
Is it still rat poison?
Probably rat poison squared.
We need to get into the world of, okay, this is actually foundational technology.
What the Internet of Money does is it creates a single network which can do a microtransaction to a gigatransaction.
The Internet is going to be one of the major forces for reducing the role of government. The one thing that's missing, but that will soon be developed, is a reliable e-cash.
And we are live. Welcome back to Final Settlement. We've got a great episode for you guys today. But first and foremost, boys, we are living in interesting times. The timeline of the past few weeks has been astounding. It appears that things are accelerating in terms of Bitcoin's adoption, its relevance in sort of the zeitgeist of the financial world and politics. We've got Trump embracing Bitcoin. He's speaking at the national conference next week. He named a VP who is not only a millennial, the first millennial on a presidential ticket, but also has some very forward-thinking thoughts around crypto, personally owns Bitcoin himself. And then you have, perhaps Jamie Dimon pivoting on Bitcoin slightly. You have Mark Cuban pivoting on Bitcoin. 4 years ago, he was talked extremely negatively about Bitcoin, said he'd rather own bananas than Bitcoin, which was strange. But now he's calling it a potential global reserve currency. So things appear to be accelerating, as I mentioned. And wrapped up in all of this is also a tighter focus around Bitcoin as a strategic reserve asset, something that whether it's an individual to a corporate balance sheet to a small enterprise, Bitcoin is increasingly being recognized as something that can really bolster a balance sheet and really provide a store of value to help propagate wealth into the future and really fortify businesses. We've seen Michael Dell tweeting about Bitcoin pretty regularly over the past few weeks. Now, Dell hasn't announced a Bitcoin treasury strategy just yet, but lots of things happening, and it feels like things are accelerating. But on the show today, we are happy to welcome Mason Carter and Joe Ianni to the pod. You guys may remember Mason. He was on the pod a few weeks back. Now formerly an employee of eBay and now devoting his full attention to the Bitcoin space, joining Early Riders as a principal and co-founding a new business that we'll talk about today. And alongside Mason in co-founding that business is Joe, who previously founded a Bitcoin advisory business and is now purely focused on building this new business full time. So welcome to the show, boys. But any thoughts on the craziness of the past few weeks?
The only way to move is to play.
That's right. I mean, it just feels like I'm in a dream. It feels like the craziest timeline to just be alive during this and be operating in this space. It just is really exciting.
Yeah, it does feel pretty surreal when you think about it. It's like watching the dominoes fall, like someone like Larry Fink change his opinion on Bitcoin. It's like you know that there's going to be future ones coming. You don't know when, and when they do, it's like, well, yeah, eventually he had to capitulate, but when it actually happens, it's just kind of surprising. Oh, wow, we're doing that now, huh? Yeah, so it's an amazing time. It's going to be fun to watch.
Gets was under discussed was this past week with Jamie Dimon, that the context of that came from Forbes. Him and Trump, there was a closed door session or group of 80 executives, and where Trump is referencing Jamie Dimon has switched positions or taken a more favorable stance. Part of that group was called out in this Forbes article, the CEO of Citibank, Bank of America, and Tim Cook, CEO of Apple. So when you think of this notion of treasury reserve from a sovereign perspective or an individual, or an individual company, everyone's coming around to kind of looking at this and wondering like what is happening here. Curious what the real intention is from a lot of it, because it's always sometimes too good to be true. But at the end of the day, like it doesn't really matter if they're adopting Bitcoin. It's good for everyone.
I think part of it is the inherent game theory associated with Bitcoin adoption, which we've talked a lot about. Even just some of Trump's comments around, China being into it, and what he really understands that to mean is a different question. But I think he recognizes that, despite the China mining ban, there's still a good amount of hash rate in China, and a good amount of mind share, just from entrepreneurs in that region. And so just even looking at that one small example, I think he sees it as, there's a lot of people that own Bitcoin in America. There's a good amount of hash rate here. It makes sense for us to lean into it. And it's that game theory of adoption playing out in real time. But Michael, I want you to, help us frame this discussion with Mason and Joe, and maybe tease out sort of what we're announcing. So we're recording this on a Thursday, but this will come out on Friday, July 19th. And we got some big news.
Yeah, I appreciate it. So I think it's important to remember how we got here. We cumulatively as a group, whether it's Onramp or early riders, have had significant experience in the traditional markets along with building Bitcoin infrastructure. And one of the largest gaps, if not the largest gap, is custody. And so we went out to build Onramp and work on multi-institution custody, which is a pivotal point in this discussion that we'll get to. But to go back, you think about a sovereign holding Bitcoin and treasury. We talked about this on the last episode of Last Trade we just finished recording, of like, well, what do they do? Like, how do you even manage that? It's like you're park it at Coinbase. It's like, sure, maybe it makes it easier to take all the assets because they're all sitting at Coinbase, like jokingly, but the reality is like custody ultimately hasn't been figured out. We all know single points of failure, but then on the other side of it, most haven't really picked up on the fact that when the price appreciates to the numbers that we're headed to, it's going to be very uncomfortable to hold plastic devices underneath a desk drawer, underneath your bed. And that goes from an individual all the way to a company. And it's ultimately what, in our opinion and thesis, has kept either individuals out or treasuries from business treasuries from opting in, because you need traditional financial controls and all the assurances that the asset will be there when your company needs it. So in building Onramp, that was the lens of the world. We took a stance from a company perspective of building on a Bitcoin standard. We, opted to spend our Bitcoin to build the business. And what we really found was a lot of prudence and first principles thinking about opportunity costs. And it's not to say you don't spend the asset. It's just that when you do spend the asset, it comes through the clearest lens of I'm spending the Bitcoin today to make more in the future. And so we saw a lot of success and foundational ways to build businesses through that. And so that was where the launch of Early Riders started, a sound capital. We don't like the term venture capital, even though it is a venture capital firm. It's a sound capital business run with the idea of Bitcoin as a unit account, and all the way from the LPs to the GPs to the ultimate allocators, which are the entrepreneurs. Bitcoin is the benchmark. With that, we understood that when you have something like this that's a radical idea, you naturally have to start in the inner side with individuals that recognize this. We spot a lot of inefficiencies and gaps in the market at Onramp. You ultimately can't build them all because you have to focus. And so part of the thesis and mandate at Early Riders is having a incubation style focus. We call it build, where we'll help and support putting groups together. But then we also have a traditional venture lens where individuals will approach us with the same thesis, and we're seeing a lot of it. And we encourage anybody that's interested. We'd like to see more. When we have our partner meetings, we looked at the board and we have all these ideas and we have all this interesting stuff. And the one that kept ringing out was treasury, because the thought experiment or exercise that I referenced to the team was, what's the one thing that if somebody else built that we didn't, would we just kill ourselves? Like, God damn it, why weren't we there first? And treasury is the thing. Everybody knows businesses need it. We're all very passionate on the Bitcoin side in this group here about inflation, how hard it's hitting every business. The SMB, everybody knows, going to the restaurant, the degradation of quality of experience or shutting down, all the way up the stack to the corporates. And so we're just proud to announce after our first Onramp, or our first Early Riders build was Onramp MENA, which you'll be hearing more about. We have some exciting stuff happening there. And then Acropolis. And so I'll let the guys, the co-founders, talk about it and the team they assembled. But that's the core lens, is that treasury from SMB, mid-market to enterprise need to exist. Multi-institution will be an underpinning of that, as foundational. But at the end of the day, you need a standalone business that focuses on all the ancillary services that corporates need that require a dedicated focus.
At Onramp, we believe that Bitcoin is the most important asset of the 21st century. The hard part is securing it right. There are shortcomings with keeping your coins on an exchange, but also with setting up your own self-custody arrangement. Onramp solves for these concerns. Our multi-institution custody solution maximizes security and minimizes counterparty risk, ensuring that your Bitcoin remains securely in your possession, and provides built-in inheritance planning to ensure your family is protected as well. Onramp provides peace of mind for your Bitcoin journey, whether for your whole stack or for part of it as a complement to your existing self-custody setup. For more information, check us out at onrampbitcoin.com.
Yeah, Mason and Joe, would love to hear from both of you around, maybe even just, before getting into your thoughts around Acropolis and sort of the strategy there, maybe just give the audience a bit more context on both of your backgrounds and sort of how you arrived at this stage of your journey.
Yeah, absolutely. So career started off in banking as a finance analyst at KeyBank's headquarters. They're, I think by assets, I think they're about the 20th largest bank or so. So one of the larger regionals, and learned a lot of technical skills there that have translated throughout my career. Got to work with some really talented people, but I had about an itch 2.5 years or so in to scratch more of the entrepreneurial side of my interests. It was during that time that I very fortunately stumbled into Bitcoin, and like most people, took 3 touch points, and like most people, I hadn't looked at it as, to Michael's earlier point, a unit of account at all yet. I hadn't looked at it as as the new cost of capital. I hadn't looked at it as the new hurdle rate, right? Not even close to those thoughts yet. But then, so I left there. I joined a technology startup, spent 6 years as director of finance and operations, and then eventually the CFO. Very capital intensive business. It was real-time stats and analytics for sports, with the first primary product being basketball. This business, I got to give a little shout out to all of the generalists out there working at startups with the finance, operations, accounting hat on. It's a really critical role that oftentimes is a thankless role. If you do your job, no one notices. If you make a mistake, then you could ruin the whole year type of scenario. So it's high stress, but that's the type of scenario that I really enjoy working in. It's fast moving on something that's never been done before. So left that opportunity at the end of 2020. And I've really been working in Bitcoin since then on a number of different endeavors. The one most relevant, Brian, you mentioned, is an advisory business that I committed full-time to last March and announced in September. So not too long ago, and about 9 months ago. And the long-term vision for this business was all about Bitcoin treasury and advising businesses on how to best accumulate or incorporate it into their particular circumstances. I took a step back a couple of years ago and said, where's the most green grass? ETF was the logical answer, but the second that domino fell and we got to see those flows for a month, it pretty quickly transitioned to treasury seems to be the area that there's a lot of interest and buzz and talk, and so just trying to get out ahead of that. That's where I see so much opportunity, and it aligns with my past experiences. So before we jump further into what we're building, I'll hand it over to Mason.
Thanks, Joe. I'll keep it short for those of you that heard me on this pod a few weeks ago, but got a degree in finance, did a few different things in college, and found my way over to eBay to join their finance futures program, which was a really great experience. I got to rotate through different areas of the business, from payments to risk, product, technology, investor relations. Got a bunch of different roles and experiences there. I spent the last year or so working on treasury, and my main focus was doing share buybacks. So I did over $1 billion in share buybacks at eBay, and every single day that I did a buyback, I wished that I could put a small percentage into Bitcoin. And I spent every last spare minute orange pilling our head of treasury, our CFO, anything I could do to help bridge that gap. But there was never really, even if I could convince everyone all at once that we were going to buy Bitcoin for the company, there was really not a proper solution until Onramp came around. And that's why I'm just really excited to do this with Joe and leverage their multi-institution custody, because it's really a game changer that will allow the corporate adoption and small business adoption of Bitcoin.
Yeah, no, thanks for those intros. I think you guys both mentioned a few things in there that I think are worth teasing out. And one is, when I think back at sort of how this has evolved in terms of people grokking or recognizing that Bitcoin has a place in sort of treasury management, I think we'd be remiss not to give a ton of credit to Saylor. He was sort of a first mover in the sense of putting Bitcoin on a balance sheet. I think how I really think about it is, if you think about the individual, this is how people have been adopting Bitcoin over time. Like if you think about an individual and their personal balance sheet, that's kind of how I view the Bitcoin that I hold. That's my strategic Bitcoin reserve of my personal finances, right? But Saylor was really the first one to take that to the corporate level. And I think there's a few interesting sort of things to pull out of that, in the sense that for years he was looked at as a crazy guy. And I think part of where we are today is a function of his success through a full cycle. So I think he instituted that strategy in sometime in 2020, and went through a full cycle, now more than a full cycle of Bitcoin's price movement and volatility, and has come out the other side. And it's been an extremely successful investment in the way he's sort of leveraged financial tooling as well, and debt markets to enhance that strategy has been fascinating to watch. But I think we needed to see the successful implementation of it for people to grab onto it and say, okay, this is maybe something that has legs. So curious what your thoughts are there in terms of like sort of why now in some sense for this business Acropolis to exist. How have we progressed over the past few years in terms of people being ready to integrate Bitcoin into their business in a material way?
Yeah, his unshaken confidence has played a huge role the past 4 years. I agree. I think you could make an argument. I don't want to downplay the role and responsibility of a number of people that helped lead to the FASB change of the accounting treatment. Mm-hmm. But you could make an argument that Saylor pushed up the fair value accounting standard a full cycle. Because it's hard to know behind the scenes how much he was pushing for that, but I know that he was heavily involved in the process. So that alone was enormous. And that decision of like the first public, founder-led company to really step in with conviction. We're not talking about 5% of their assets. That could have gone sideways in so many different ways. And yeah, I agree with you. I mean, depending on everyone's spectrum of like their beliefs in terms of what Bitcoin is and what should be is different. But regardless of if there's always going to be some detractors or some criticisms based on the way you look at and talk about the space. But when you really think about it, like it could not have gone better in terms of who you could have picked to be one of the people constantly speaking out to sophisticated institutional players. So to your point, it's been huge. It could have gone sideways in so many different directions with someone else.
Mason, on your side, I'm curious what you saw with your experience at eBay, because there was obviously, you talked about on the last pod, 5 different ways to make 5%. It sounds like effectively like everyone's strategy, whether it's an individual and their RIA or their financial advisor helping them, or at the corporate level. And we all know that that's not outpacing, the hurdle rate that is inflation and purchasing power. But you obviously saw also the hiccups there. And so how do you think about adoption and where it comes from, and how something like this, Acropolis, effectively participates in the transition? Because like there's a key thing that most people don't talk about is anybody that plays in the space is an educator first, and then they offer their product second. And so that's ultimately where this has to start. So just curious, like how you think about all that.
When I think about the 500 different ways to earn 5% or whatever I said along those lines, is it's never about diversifying your assets for sake of diversifying the assets. It's about diversifying the risk. And once you have a custody solution that allows you to do so, and it really, I think, is going to happen gradually than suddenly. I think there's going to be, we've been talking about this accelerated timeline of Donald Trump and Jamie Dimon and Larry Fink. And with these people coming on our side, I think it's going to happen gradually than suddenly. I mean, all the way back when I first got into Bitcoin, it was actually Larry Fink and Jamie Dimon was the reason why I didn't go all in, because they made me, being those Mount Rushmore titans of finance, it made me question everything. And having those guys come on our side, I think, is just going to accelerate everything. And from a corporate perspective, Michael Saylor talks a lot about how if you want to grow, you are looking for an acquisition partner or to be acquired. And he talks about how Bitcoin is that perfect partner for whether you're a large corporate or you're a medium-sized business looking to grow market share. Bitcoin is the perfect acquisition partner, is the perfect merger. It is, I'm very bullish on the corporate adoption and what we're seeing soon.
Yeah, maybe we could start to tease out a little bit around, sort of what Michael alluded to in some of his context and framing around, the opportunity set here for a business like Acropolis. Because if you think about, what Saylor has done, or even more recently, Semler Scientific adopting a Bitcoin strategy, in those instances, there was a founder or, a head of the board who had enough unilateral control to make a decision like this. And also, was willing to sort of figure it out themselves in terms of how to do it, how to custody the asset, have a strategy around implementation. But I think, as we're all sort of referencing here, if we're at this inflection point where the average business recognizes they need to do something like this, they're going to need a toolkit. They're going to need advisory on how to actually implement this, all the way from custody to the timing of different deployments of capital and how you manage that Bitcoin on a balance sheet. So if you guys could just sort of tease out, really the strategy around Acropolis and why something like this really needs to exist.
Yeah, absolutely. We're at an exciting inflection point when it comes to the corporate adoption. And when you look at the market, the different products and services that are built out, there's a lot of fragmented offerings. Some people focus mostly on custody. Some other businesses, corporations focus on maybe it's payroll services. There's some that you could potentially go to for advisory. What we're really excited about with Acropolis is we're going to build out the first comprehensive treasury solution for the Bitcoin age. It's really three pillars to the product. You have the custody piece that Michael did a good job of teasing out. It's really multi-institution custody in our view. It opens the door for wide-scale Bitcoin adoption. It's advisory. So the role of a Bitcoin strategy officer, there's a significant shortage of hireable talent. So it's really, Acropolis is playing that role of outsourcing that key function so that A, you don't hire the wrong person, or that B, you don't have to try to bring on a full-time resource if you're a small or medium-sized business and you just really aren't in a place to do that. And then lastly, it's ancillary services. So Bitcoin, the settlement layer, the technology, there's an infinite number of services that can be built out that businesses are going to want to tap into and use. Exciting opportunities around benefits for employees. The list is really endless. One example that I'll share a personal anecdote on is escrow. So previous role, I was consulting for an investment bank and got pulled into the back end work. They were kind of understaffed, and it was unbelievable, the friction in the escrow process of the fiat system. There was so much manual work, and the bank was physically moving with their keyboard these escrow wires from the general account into sub accounts. But we had to call them and tell them names and amounts that we were expecting to come in. And it was just fascinating. All I could think of is how Bitcoin's going to completely eliminate this. That's just one example of the ancillary services that Bitcoin's going to allow. Going to touch back on the advisory piece really quick, just because we've talked about the custody piece earlier in the call, and the advisory piece, in my view, is really what's going to lead the next few years. MicroStrategy is extremely exciting to track and follow, and to watch hopefully some copycats come out here soon. The vast majority of companies, they're going to start with 2%, 5%, maybe 10% of their reserves, right? So for those businesses, they're not going to, on day one, change their treasury management tech stack. That being said, as that 5% naturally, because of Bitcoin's performance and because of the growth in their conviction, once 5% becomes more like 20 and 30% and then 50%, they'll have much more of a desire for adding in an infinite number of Bitcoin related products and services.
Yeah, I think that's a great point. We talk about this a lot of, we're still so insanely early. We can't even, Brian, like this would be a great one. I talked about it on the previous pod, but it's what makes these podcasts really effective in my mind is that we're building weekly, week over week. And so we have these conversations that are fresh. And one of the ones that's very fresh is that we've been going and talking with some of the largest institutions in the world about our custody first, because that's a differentiator. And we've kind of understood that, like, wait, they don't appreciate the form of custody because they don't actually appreciate Bitcoin, because they're not actually allocating the appropriate amounts. They're thinking of it as a risk asset in the sense of a crypto bucket. And so they're okay with leaving it on a third party exchange. And to Joe's point, where that's insanely relevant to this is like the first and second step are advisory and understanding the asset and how do you scale into it and why is it different than other crypto assets, right? So with custody and advisory being key pillars for the next few years, in parallel, the rest of the market will start to catch up from ancillary services, escrow, remittances, payroll, benefits. There's no shortage of different attributes that the asset has that allow for a better experience across the board with treasury. The problem, what we've seen and having allocated and worked in the space for close to half a decade now, is that individuals haven't really built with the lens in mind of there's an order of operations. So they try to jump to the end, and naturally education and custody are the foundations. That's, hence Acropolis, like the notion of you have to have a strong foundation before you can actually go out, and the foundation stems from protecting somebody's wealth, storing it, and then you can grow from there. And so I think that Joe really hit the nail on the head of like advisory and why it's so important is because you need to be able to meet people where they're at, and you can't tell them to have fun staying poor. You got to be able to, forecast the kind of capital that they're bringing in, look at their revenue, think about how do you size, manage volatility, how do you sweep. This is probably a good transition or at a certain point, Joe and Mason, to talk about the advisory group, because it's some of the best people in the world. And one of the examples that they brought up is effectively they've been doing this for the largest multinationals, already trying to explain these concepts to them. And one of them is effectively taking your treasury yield and plugging that into BTC as an initial kind of first legging in, right? So you're effectively taking not the principal amount, but any of the additional, capital coming out from that treasury and then starting with that strategy. And it's very savvy when you think about that. And so I think that's just a key component to this whole thing is how do you actually advise for individuals to get in and then feel comfortable with how it's going to be stored?
Yeah, we're blessed to have an incredibly talented advisory team. And what you're referring to is a conversation we had with Glenn Cameron, who has a long, illustrious career in institutional asset management. And he brought up a great point that for these businesses that are on the fence and maybe they don't have a comfortable amount of free cash flow every month, maybe they're basically breaking even since COVID because of all of their inputs increasing, they may be really hesitant to step in, but they may be utilizing sweep accounts for their checking accounts. So like the lowest hanging fruit is for a business to just take the yield on those sweep accounts. The last few years, it's been about 5% pre-tax, and just accumulate Bitcoin with that as a starting point. So you're not even really using the capital or the working capital. You're just using the small bit of interest you're earning on that. That's just a way. There's so many different ways for a company to step in with what's comfortable for them, right? That's just That's probably the lowest hanging fruit.
Does your Bitcoin custody setup keep you up at night? Maybe you still have coins sitting on an exchange worried about hackers. Or maybe you've set up your own self-custody but don't feel safe with your Bitcoin savings stashed on a little plastic device in your desk drawer. Gain peace of mind with Onramp and our multi-institution custody solution. Here's how it works. Onramp creates a dedicated multi-sig vault just for you. 3 separate institutions each hold a key. Onramp, BitGo, and CoinCover. But none can move funds unilaterally. Instead, only you have control over your coins. With Onramp's multi-institution custody, you'll sleep better at night knowing your Bitcoin is stored with best-in-class security on-chain with fault-tolerant multi-sig. If you believe your Bitcoin is going to be worth a lot someday, don't jeopardize that future by exposing your coins to hackers on exchanges, $5 wrench attacks in the real world, or perhaps most importantly, the risk that you might screw something up with a highly technical self-custody setup. Onramp's multi-institution custody eliminates single points of failure, reduces your personal attack surface and technical burden, and provides access to financial services that allow you to confidently secure your Bitcoin, including inheritance planning, insurance-backed warranties for all balances and transactions, low-cost trading, and more. Bitcoin is a once-in-a-species asset. Secure it right. Learn more at onrampbitcoin.com.
We've been able to put together a really strong group of advisors from Rich Kerr, who worked at Charles Schwab for 30 years, and people like Grant Switzer at PwC and KPMG for, I think, 35, 36 years. We've got a really talented team of advisors from everything from venture to investments to treasury to accounting, traditional finance. I think the group of guys that we've been able to put together really makes me especially bullish and especially confident that this is the right time. And we're able to lean on them when it comes to any question that we have in any of those areas. We are big proponents of leveraging others' experience where we don't have it, and really happy to have that group of guys together.
Yeah, I think every advisor on that board looks incredible. Rich stands out because of his experience on the RIA side of the business and approaching RIAs and working via channel partners to establish those individuals are working with entities preserving their wealth that own businesses. And so there's a natural synergy with having those kind of channel partnerships and relationships established. As an example to what Mason was describing, is there's going to be different avenues to really find the right time for these businesses that are already keen to understand the asset class and how to preserve wealth for their own personal side. And now as that naturally falls into their corporate or their person, it doesn't have to be corporate too, because I think we're talking about corporate. I personally have like, that's going to happen. It's going to happen. It's like the SMB and the firms that just naturally need to stay alive is where we'll be able to support and more than likely focus on earlier, simply because of the notion of like Bitcoin's emergent and there's no shortage of small. Brian, you mentioned the Lindy of, or Mason or Joe as well, on MicroStrategy living through a cycle. It's like there's probably been, for every MicroStrategy, there's 1,000+ businesses that have lived through the cycles. And all those businesses are going to need better forms of custody and are going to need additional services, and they'll step in much faster than anybody on the corporate level.
Yeah, one element that I think is worth teasing out that we've sort of alluded to here is like, in order to implement a long-term Bitcoin treasury strategy, you need to have ownership assurances over the asset. And so, you know, if you think about what some companies or some individuals might feel is the easiest route of getting Bitcoin exposure is now these ETFs that exist. Well, you don't actually own the underlying asset. And so that's where it sort of ties into what Joe was talking about around the ancillary services and the other things that you can do from a settlement layer perspective, where you actually need to own the underlying. And so, you know, part of what opens up the opportunity to do that is multi-institution custody, which we've referenced. But I would like to sort of pull on that thread of, you know, the ancillary services and why it's actually necessary to have custody of the underlying in a way that, you know, you can have greater assurances that you're going to have access to the asset 10, 20, 30 years from now. because there's not a single point of failure, and you're not relying on individuals internally managing private keys themselves, but you're trusting experienced entities that their business is key management. But again, those entities don't have unilateral control, so it gives you greater assurances that Bitcoin is going to be there. But yeah, I would like to tease that out a bit, Joe or Mason, on some of the other things that you guys sort of have in the pipeline of services around that Acropolis will provide, and how that ties to the actual settlement layer of Bitcoin, and why that's super important.
Yeah, sure. Speaking of advisors, we're excited to have Bobby Shell help with marketing and sales, and he's also going to be co-hosting a podcast with me. We're going to be dropping it weeklies. It's going to be called New Foundations. The reason why I bring this up is Bobby does a great job talking about the intersection of Bitcoin and small businesses. So one of the things that he likes to talk about is how you're going to be able to pay and receive bills in real time as the value is being exchanged. This is going to make an enormous difference for small businesses especially. He had you'll have to tune into the first app that's going to be dropping soon. Again, that's New Foundations. He had some alarmingly high percentages of the number of invoices that go unpaid for small businesses. And part of the reason why is because it kicks off a daisy chain of when one business is waiting for an invoice, well, then they may be slowing down on paying their bills. And then the next business is waiting for them to pay in order for them to receive that money and then pay their bills. I was just shocked at how high of a percentage it is. But when you really think about it, I guess it's really not all that shocking, especially in times like right now where everyone's sitting around looking for this recession to come. But really, it's felt like we've been going through a recession for a few years. Just because the nominal recession hasn't hit, people's expenses are going higher, and these small businesses, they're kind of in the compressor, right? Their costs are increasing, but then on the bottom side, their customers are also getting squeezed. So increasing your sales prices, you can't do it one-to-one with their cost increase in a lot of cases. So factoring that in, sorry, call coming in. So back to your point, implementing AP and AR in real time, that's not possible without Bitcoin settlement layer. That's one exciting area for us.
I want to go back to what you were saying about the small business and their cost going up. I know we're talking about the ancillary services, but when it comes to SMBs, there's never really been a complete necessity for you to have a treasury strategy whatsoever. And we've even heard some stories from preliminary talks about people who or SMBs who are leaving millions of dollars in single bank accounts, not having any regard for the FDIC insurance. And it's just, they're really not sophisticated in this state. But as you have rising costs of labor and rent and everything, as Joe said, you need to own an underlying protection for that. And we're really excited to help SMBs in that area. Going back on some of the ancillary services we're building out, we're tinkering with a bunch of interesting ideas, one of them being a ability for you to pay your employees in Bitcoin with a vesting schedule instead of RSUs, which only public companies can utilize RSUs to retain talent. Now you can be a medium-sized business, issue sort of Bitcoin RSUs on chain and allow those to vest over a period of time. And you could drip those in daily. You could drip those in weekly as people work for you and, give you their labor. There's a lot of exciting things that we're working on. But really the foundations of the custody, the advisory, and then everything that we can do in the future is really exciting.
Yeah, no, that's really fascinating. And thanks for walking through some of those ideas. I think it might be worth taking a bit of a step back and, wanted to reference that, there will be certain collateral that folks can go view on the Acropolis website, a white paper and a playbook. And some of the things that you guys talk about in those documents is kind of, the status quo. So thinking about traditional treasury strategies and why, those are in some sense fundamentally broken because they don't have a sound unit of account. But would be curious to sort of tease out how you think about transitioning to this new world where Bitcoin is a core component of a treasury strategy, and how that the sort of distinct differences in terms of what that world looks like versus the sort of status quo of traditional treasury strategies. And is there any sort of anecdotes or stories you can tell from people that are waking up to that realization that something is broken in terms of this is sort of Saylor's story to some extent, that he recognized he had this massive melting ice cube of whatever it was, 500 million in cash just sitting on his balance sheet. So how do we transition to this new world, and how do we get people to recognize that the old strategies are just not going to work going forward?
Yeah, absolutely. Status quo, I would say, is the most important section of the white paper. You really can't appreciate Bitcoin and what it's going to be doing to the treasury function without understanding why exactly we're in the situation we are. I'm going to break it into two segments. One is small businesses and mid-market, and then the other is enterprise. So with small businesses, it's very common to have really no treasury strategy at all. They either sit in cash or they sit in sweep accounts, like we mentioned earlier. If you have a small business sitting in $5 million in cash for 1 year, and you assume, there's a lot of different ways to look at inflation. What I like to think of as a base is that 7% monetary expansion per year. Now, is there actual inflation they're feeling? Double that? Possibly. But I think it's conservative to at least just go with that 7%. So on that 5 million, 7% is $350,000. So if you assume average salary of 70,000, that's the productivity of 5 full-time resources, just slowly, quietly getting stolen away from them each 12-month period that they just sit in $5 million of cash. Now, sweep accounts are a popular way to try to combat this. The last few years, you've been able to get a 5% on a money market fund. Previous decades, it was much, much lower than that. But even in best case scenario, you're getting 5%. Well, it's only 3.5% after tax, and you're only making it halfway to that 7% monetary expansion. So you're slowing the drip, but you're still dripping value. So this is combined with the fact that the fiat system places significant burdens on small businesses and mid-market businesses, strictly just by its design. With the monetary expansion required in a credit system, it pushes us all out of savings. So that's whether it's individuals or companies. And this promotes this thoughtless investing into the stock market. So all of this capital is flowing into these public companies that these small and mid-market businesses don't have access to. This makes the large companies more quote unquote financeable, get preferred interest rates, and it just really helps them with their economies of scale to continue to gobble up market share. You couple this with the fact that the vast majority of market participants, rightly so, they think the stock market just always goes up if you just wait out the 1 or 2 years where it's dropping, right? They're not looking at the denominator whatsoever. So this thoughtless investing into the public stock market, it's almost like the de facto piggy bank along with real estate the past few decades. This really places a significant burden on small and medium-sized businesses. So when you couple that really with all the technological disruption we're seeing with artificial intelligence, it's hard. You get to this conclusion that, it may seem hyperbolic if you don't walk through that progression, but it's hard to picture a lot of small and medium-sized businesses surviving another few decades without incorporating Bitcoin into their treasury strategy. I'm not saying they necessarily have to go all in, right? But even just 5% of your monthly cash flow you're generating could end up making an enormous difference. It really helped by embracing a scarce asset that's really long-term oriented capital. You're putting yourself in a position to operate with more flexibility and with more strength. Mason, I'll throw it to you over for some thoughts or comments before diving into the enterprise side of the equation.
Actually, so before the enterprise, I think it's just worth reinforcing, this stuff is so foundational to transitioning from whatever we know is going on, that like it has to be built. I think about all this stuff is like first principle. We looked in the market from custody. It's like nobody talked about custody. They always talk about hash rate and being distributed. And it's like the keys need to be just as distributed as a hash rate when you think about it from a game theoretical perspective. In a similar way, like there's only increase in monetary expansion to service the debt levels, or it collapses. And we know they're not going to let it collapse on itself. They'll inflate it away. And if that's to be true, then these experiences that we all feel in our daily lives when it comes to going to the restaurant, to getting laid off, you know, nobody says it, but like the quality of experience in going to restaurants is just taking a turn, like the quality, because they're getting squeezed at all corners. So whether it's the amount of people they can hire or the actual ingredients, and that goes across the products across any industry. So there's only one way out of this, is you have to be able to preserve your wealth. And we talk about liquidity profile, education, tailwinds, like it is Bitcoin. And so this is the essence of this kind of stuff. I think we're all here for this, the advisor list. And when individuals ultimately have to come in, it's very Darwinistic. It's like, you got to survive. If you're going to survive in a future state, you're going to have a better form of money. If not, you're going backwards, and your product may help you because your margins outrun it for a while, but ultimately it's going to catch up because it catches up with everybody. And so I think this is why it's so foundational.
Yeah. And I'm glad you stopped us, Michael, because we have so much just passion and motivation in the small and mid-market space. So, you know, when you think about just the cornerstone of a neighborhood, a family-owned restaurant that's been around for 60 years, them incorporating Bitcoin into their strategy, even a relatively modest way, that can make the difference in that restaurant surviving another several generations or not being able to make it another 5 years. Like, that's so motivating to me to I know there's a lot of different offerings out there that are going to try to approach this, but to build this holistic, comprehensive solution that's going to reach some of these businesses. I mean, there's just what makes me so like fired up about this topic is really just the general misunderstanding of that denominator, of even the situation that they're in, because it is really complex. It's really complex. And helping distill that down, helping those businesses kind of rewire the way that they're looking, because they're usually so busy and they're trying to outrun the cost inflation that they just think, if I just got to run harder, I just got to run faster. And that's really not the solution. You have to embrace a better form of capital, a better form of savings.
Yeah, no, it's a really good point. I think one element that you guys included in the playbook document that I think is worth digging into is, you know, something that comes up outside of treasury adoption, but even just when I talk to individuals who are looking to, you know, incorporate Bitcoin into their, you know, personal finances. One of the first questions is always, you know, well, do I just buy a bunch right now? Do I DCA? Like, what is the strategy around that? And I think that'll be a very pertinent question for these smaller mid-market businesses, and thinking about how to go about this, whether, you know, it's a break-even company. Maybe they can't make a bulk purchase at first. So like, I'd be curious to tease that out a bit around, you know, how you're thinking about strategies and how they really apply to, you know, different businesses in terms of where they are in their life cycle or their free cash flow generation, and just put some finer points around, you know, how you would advise certain businesses depending on their circumstances.
Sure. Yeah. You touched on a lot of the reasons why advisory really is needed, particularly for businesses. There's so many different circumstances of cash flow, capital positions, and of cyclicality. You know, ideally from the high level, you buy lump sum when you enter, and then you also have recurring purchases every month. And there will be a lot of businesses that can do that. But there's a lot of other businesses that may have to make more periodic purchases. Really, the key point is you want to have more Bitcoin in 2 years or in 5 years than you do today. Where I think a lot of people get held up is, and a lot of businesses get held up, is they're worried about, they don't want to purchase today and then price drops 20% tomorrow, right? And that hesitation usually leads to inaction. on our white paper, we laid out a scenario analysis for a business, initial accumulation of 300,000 and then monthly accumulation of 15,000. And what's really interesting in the numbers is after 2 years, they're actually slightly in the red based on the assumptions. What we assumed is, it's always difficult to project the price of Bitcoin, but if you just use history and you look at most logical place for the next peak would be mid to late 2025, and the most logical trough after that would be 12 months later. Well, if you steadily accumulate Bitcoin from now until then, you actually may be in the red in terms of your dollar value of Bitcoin a year or two in advance. But if you have the conviction and the education and the understanding that it's not about having a dollar value of your Bitcoin being higher in 2 years, it's about for 5 years from now, when that price is higher, that you were able to build up a position. Trying to wait and time it perfectly, especially for businesses, would be a fool's game for two reasons. One, if you're first stepping into a business and you think you're going to make that purchase at the absolute bottom, then you haven't been paying attention and understand how much blood is in the streets at these moments and how difficult it is to purchase for the first time then. But even if you do, let's just assume that you do that and you have that conviction at the right time. Your business might not be lined up correctly to take advantage of it. Maybe your cash flow is not as healthy those months as usual. Or 6 months ago, you just invested in a new factory or a new R&D project, right? So all of a sudden, you've been waiting to buy Bitcoin, and now's the perfect time, and it just doesn't quite line up with everything. So steady accumulation is really critical. And, with that, each situation is so unique that we look forward to helping people asking the right probing questions to help them get to their final strategy.
I think that's really important because I think like most individuals listening, because we're still so early in this bull cycle that people have been here a while in the group here, it's like we discount what we know as DCAing or, the timing and sizing appropriately to manage volatility, which historically keeps people out. So the ability to meet people where they're at and explain this. But that's just not enough, because if they understand that, it's like, well, I keep hearing that the asset gets lost because I leave it on a little plastic device or I leave it somewhere else. So you mirror the consultation coupled with the better form of custody, and now you literally have something that is a game changer. And we discount that because we're so close to the market. We're like, yeah, this is easy to do both. It's like nobody's there yet. That's why the price is still 1/100th of where it's going, or 1/1000th. So I think it's just important. Like the way you just described it there is important part of it, and it's not an easy thing because usually like you go out and scream at people and like buy it, have fun staying poor, number go up, and they're like, what are you talking about? I gotta go back to work.
No, it's a good point in the sense that, and you sort of brought this up earlier, Michael, around in terms of some of the conversations that we have on the Onramp side and just sort of foundational education around the asset. And what's always been sort of top of mind for me when I talk to prospects on the Onramp side, or even just friends and family, it's like the first thing I start with is like, you need to be thinking about this long term. Like this is not a 1, 2, 3. You have to have at least if you're just thinking about it in terms of historical cycles, like you need to have at least a 4 to 5 year outlook on this deployment of capital, right? And so, given that, what you're referencing, Michael, is like for the uninitiated business that might be thinking about something like this, they need to have that long-term orientation, but historically they haven't been able to because of the custody and because you couldn't just trust that the exchange that you held the coins on was going to be there in 5 years, because we've seen countless examples of that not being the case, or you mismanage the keys yourself within that 5 year period. So I think part of the really interesting point that we're at right now is that we now have the tools, we have the foundations to be able to properly think about this long term. And so I think that is a turning point for us where now that the companies and the people that need this can actually go out and implement it in a real way, because they can have better assurances that the Bitcoin's going to be there in 5, 10, 15 years. Mason, I cut you off. Go ahead.
Yeah, I just want to encourage everyone to head over to our website, acropolistreasury.com/whitepaper or /playbook, and go through this. Joe did a great job at going over the highlights, but in the playbook, we go over the accumulation strategy, the purchasing strategy, the custody, insurance, accounting. We go through each one of them individually, and I think it's a great resource for businesses of all sizes, and we're excited to have everyone check it out.
Yeah, and I would encourage also to share this, because I think like the demographic again that listens to this, I think because we're earlier already kind of knows a lot of these concepts, but their friends and family don't, and I think they want to protect them and their businesses. And multi-institution custody has a lot of areas that it fits in the market. I can't think of one better than businesses. And the reason why I share that is because previously building Unchained, one of the big highlights or reasons where Onramp came about was once we got into businesses outside of two brothers running a company and holding a ledger each or a treasury or whatever, it was just like, you guys are nuts, because it's like, what do you mean? And some didn't say you're nuts. Like they would say, we'll go to our board, and then you go to a board meeting and you like realize you lost a deal. And it's like, because you just can't, as a fiduciary, manage capital on behalf of a group of 20, 50, 100, whatever size of the business. And so this is really where it comes at like core infrastructure that all Acropolis clients get as part of, working with us and early riders, from whether it's multi-institution to the insurance that Joe was talking about, and understanding that there needs to be, fault tolerance and redundancy built into this. And so for friends and family that have been looking for something like this to finally dip their toe in, and maybe they're not ready to like start buying Bitcoin, but they want to learn more. They understand that there's a problem. Everybody knows there's a problem with the rising cost. They just haven't heard from anybody, or somebody else too, which is the nice part. It's like sometimes consultations are great because you just get to let somebody else talk to your friends and family because they're tired of hearing you. So just to echo what Mason was sharing is like, feel free to book consultations and get a hold of the guys, because that's really the game is like education, talk about these concepts. And then when people are ready, they'll ultimately make their move.
And if you're really excited about it, we're going to be in Nashville next week during the conference, and we're going to be booking meetings all week. We want to talk to you, whether it's a small business, a medium-sized business, an enterprise, or even an individual just wanting to introduce your friends. Like Michael said, we want to talk to you. So reach out to us and just go to acropolis.com or acropolistreasury.com/contact.
Yeah, Joe's on an exciting panel. I think it's what's the group? Sam Callahan is moderating, Dylan LeClaire, Chris Kuiper from Fidelity, and Joe talking exactly about this stuff, treasury asset, Bitcoin being a treasury reserve asset.
Yeah, the Thursday Institutional Day event going on. We're really excited for that. It's going to be a great discussion.
It's going to be awesome. We've put together an incredible lineup. Can't wait for that. Maybe before we wrap, I wanted to just get some thoughts from the group around a rumor that was going around this morning that Trump is going to announce at the Nashville conference during his keynote a Bitcoin treasury reserve strategy for the United States. Do we think that's real? Unsubstantiated rumor as of right now. Where would you even put the probabilities that actually happens next week? Anybody?
I think it's real. I think it's happening. I don't know if I'm just naive, but I think it's happening. We absolutely live in a simulation. Larry Fink is on our side. Jamie Dimon is on our side. Donald Trump is on our side. One by one, everyone will capitulate. And I am a little bit worried about other countries being able to front run the U.S. if he does make that announcement. But in the end, it's great for Bitcoin. It's great for the adoption. It's great. I mean, the United States does own 207 some odd thousand Bitcoin, so we'll be all right. But I think it's happening.
I'm kind of on the other end of the spectrum. I think it's possible, but he's obviously there to be very supportive, right? And he's going to be talking about how he sees a future for it and how it's going to play a strategic importance. I don't think he's going to announce any sort of official decisions if he does get elected. I think that would come after, but hopefully I'll be surprised. And to Mason's point, I'm not even sure I want him to just yet. Maybe I'd rather
theoretically, it probably wouldn't make the most sense before he's in a position to actually enact the change or the strategy. But yeah, I mean, he said some other things that would indicate he maybe doesn't fully appreciate that. Like he's going, we're going to mine the rest of the Bitcoin in America. Like, so I think he's still coming up the curve in terms of his education as well. So someone needs to get in his ear and say, maybe you don't want to announce this until we actually do it.
That would be the bull case. I kind of fall in the middle, but I think that would be the bull case to why he would say something like that, because he doesn't understand.
Right.
Like, this is serious. Like, we talk about it a lot. It's like sometimes you counter position the ability to not fully understand it is a like in a way that can benefit everyone. And the fact that they don't fully understand it, because if they did, to Brian's point, they wouldn't say it and they would be accumulating. But it's more probably from a token, novelty thing, which is perfectly fine. So that would make it more favorable, at least to like the Mason side of, they do come out and say something.
Well, we will see in a little over a week. We will. Do we know which day he is giving this keynote, or is that not?
That's probably the last day,
probably
like
the
Friday.
Day. Well,
but maybe just one thing to reference is like we talk about a lot of these concepts is they sound like theory. We sound very sure. And I think we're all here very confident that at least directionally how this plays out. And every year it's just accelerating, right? Because the idea of Trump, we're talking about Trump saying this, the front-running future president of the U.S., the United States. 3 years ago, you had a small, sovereign nation announce it as their reserve currency or their currency. So you had, what was it, RFK last year? This is what this looks like playing out in real time. The price is setting around $70,000, a couple months after the halving. Like, this only goes in one direction. And so, again, when it comes to sharing this and looking at it, it just makes sense to at least get a little educated, look a little bit further, take time to research, listen to other podcasts. Because it's important, especially from a business perspective, Joe. Like, it's a really good anecdote of if the restaurant doesn't adopt it, like they go away, like all that lineage is just done and it doesn't come back. And so this is kind of like the stakes are really high. And so it's important to like kind of take these things and while we joke around, kind of, it's serious stuff. And so excited to have this out there and then seeing everybody next week.
Can I just say one more thing on the businesses? I know we got to wrap, but I'm really excited to help give businesses of any size the ability to do more long or more high time preference things, or low time preference things, like beautiful architecture, amazing businesses that last for generations. These things are slowly being lost in our society, and giving a solution for businesses of all sizes to own Bitcoin and get back to that is something I'm really passionate about, completely outside of Bitcoin. And I just wanted to mention that here at the end.
Yeah, no, we're helping pull forward a future where capital deployment becomes more disciplined. Like that is, if you're embracing Bitcoin as a treasury reserve asset, you fundamentally understand that it's a better form of money, a better store of value, and that influences a lot of your decision making and how you go about building a business, building a strategy, whatever it may be. It really does start to influence everything you touch once you have that flip in thinking that allows you to orient yourselves more long term, because you have this this fortress balance sheet that is going to appreciate over time. It allows you to think more strategically about different opportunities and not just be constantly caught up with chasing that chasing on that wheel of you got to keep up with the debasement, right? It allows you to think a little bit more clearly when you don't have to have those worries constantly. So super exciting stuff. Joe, Mason, thank you very much for imparting some wisdom on the folks and introducing Acropolis. Really excited to hear everybody reach out. And we're going to be in Nashville, as mentioned. We want to talk to you, whether it's about this, Onramp, early riders, we want to hear from you. So thanks, everybody.
Thanks, Brian. Thanks, Joe, Mason.
Yeah, thanks for having us.
Later,
Thanks, guys.
Peace. Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.